Let's build the perfect 5 ETF portfolio for weekly dividends. Now, I'm taking some of the best of the weekly performers from their past performance, of course, and we're throwing them into this portfolio that is going to pay us multiple times every single week. If you don't know, I am Spencer. I talk all about income investing and ETFs in general, and I've been tracking the weekly payers for over a year now. So if you are interested in weekly dividends, monthly dividends, or just making money in the stock market, don't forget to like and subscribe. That way you never miss out on future updates and you'll know what income investors are watching. Let's roll that intro. Now, I want to start this off by saying this is not a get paid every day video. I think we're going to get paid 4 days out of the week, which is still amazing, but it's not a dividend everyday video. This is the top 5 weekly payers from what I've seen in the market so far and my personal choices, not financial advice. I want to know what you guys think and if you would make any changes. So we're going to look at these. We're going to look at how they compare with competitors. There's a couple in each space that I want to look at and see which the best performer is, let's say with all the Bitcoin funds or all the Magnificent 7 funds. And we'll find out which ones have been the best performers, thus making it the perfect ETF portfolio for weekly payers. Now we're going to start off with some interesting decisions. I know, I'm curious as to what you guys think, but we're going to start off with the Magnificent 7 ETFs and see which of the weekly payers has been performing the best. We are going to be using Seeking Alpha's chart. It's going to showcase the total returns with dividends included. And so we're starting off with YMAG versus MAGY. Now we can see they trade very similarly. There's not much of a difference. But when we go here and we go to total return, we're going to see that when you stack them up against each other, that MAGY is not the better performer. YMAG does come out on top. Now, it does have more of a trading history as well. But let's talk about this. Personally, I would have expected MAGY to be the better performer. It writes calls on the MAG 7 ETF by Roundhill. In long term, it might eclipse YMAG. But for the time being, YMAG is the better performer. It's even beating out YMAX. Actually, both of these are beating out YMAX by quite a bit, which is very, very interesting because YMAX was always the front runner. YMAG has a dividend yield of roughly 50% versus MAGY's 36%, 35.5%. Now we scroll down, we can see they have tons of stuff. I don't have premium even unlocked on this, but there's some key factors we should look at. This is the trailing 12 months, so it's not a good factor because MAGY has only been trading since April, but YMAX is accurate because we have seen almost a full year of dividends. They both pay weekly, and that's all there really is to talk about. They also do have similar expense ratios, but YMAG has a much larger AUM, and it's been performing really well. I've been surprised by both of these, but all in all, YMAG does come out on top, and that's why it's going to be our first choice. So we can see expense ratio, actually, YMAG a little bit higher, 1.12 to 0.99. Not much of a difference, but for some, it might be a big deal. We can see it's YieldMax versus Roundhill. These two ETF providers go head-to-head all the time. And I'm curious as to which ones you guys like more. I've seen a lot of different comments. There seems to be a pretty 50-50 split. So let me know what you think. But that is our first ETF in our 5 ETF portfolio. This next ETF, I think, is going to change some minds. Some people do not like this one, but the performance speaks for itself. It is the best performer in its class by far. So let's check out ticker BLOX. Now I need you to focus in because this is a more complicated answer. When we're looking at blocks, we have other ETFs to consider: YBTC, YETH, XBTY, and LFGY. And using Seeking Alpha's tool, we can see that total return-wise, blocks is not the best performer, but it doesn't factor in when the funds launched like the drip calculator does. So I'm going to look at this and I'm going to do that math for us. So we can see at the time of launch, YBTC was already up 27%. If we go to current day, it's up 34% for about a 7% difference. If we go to LFGY, it's up about 5%. If we go to XBTY, it's up about 4%. Some good solid returns, but during this time span, blocks went from 0% to 18.64%. If you're looking at this and you're going, well, what about YETH? It is the better performer in this time period. You are correct. YETH went from being negative on the year, 12.67%, to being positive almost 19%, which is an insane run. It well outperformed blocks. But I prefer BLOX. It does have some ETH in it, it has some Bitcoin in it, and you have more exposure to those bigger crypto company names. You have Robinhood, Hut 8, Mara, Riot. I think there's even some NVIDIA in BLOX, but we also have to remember that BLOX is a growth-focused ETF. It pays a dividend, and a high dividend at that, but primarily the focus is growth, which is different than what a lot of investors are looking for in the income investing space. For me, I like having both. I like having an ETF that will pay me a little bit of a lower yield in comparison to some of the others, but still maintain that growth rate. And I can still drip those dividends, and then the growth and the drip compound, making me so much more money in the long run. And again, if you prefer to have YETH or YBTC, there is nothing wrong with that. Nothing at all. I definitely can see a portfolio that wants more exposure to Ethereum if you're long on Ethereum or long on Bitcoin, or who knows, if the market's down with either crypto or the stock market and you want to dive into one more than the other, that's totally okay. Not financial advice. This is just my opinion. And I am building a portfolio that I would basically buy and hold indefinitely. I'm not looking to trade this actively. I'm going to have drip on and continue funneling the money back into the portfolio. So, definitely interested in what you guys think. Is BLOX the right choice, or should I go with YETH, LFGY, YBTC, XBTY? Drop it in the comments, and now let's check out our next ETF. We have seen NVIDIA going absolutely ballistic these last 5 years. Now, although I do think that growth is going to slow down, I am still long on the company. So we're going to use an NVIDIA fund in this portfolio. There are a lot of really good ones to choose from, but I'm going to select the 3 weekly pairs. We have NVII, NVDW, and NVYY. We have REX shares, we have Roundhill, and we have Granite shares in this ensemble. Now, going from all-time returns on the 6-month chart, we do see NVDW performing the best, but it's very, very neck and neck between two of these funds. So we can see the start of NVII was 5/28, 2025. Since then, it has run up a handsome 36%. NVDW during that same time went from 6.6% up to 42.8%. So they're very, very close. The other drip calculator from dividendchannel.com has NVII coming out on top. And I am going to go with NVII. We can see expense ratio wise, they're the same for NVDW and NVII. And NVDW is a bit bigger at almost 63 million compared to NVII's 26.25 million. But I'm choosing NVII for a reason I will tell you in a couple of minutes in this video, because I don't want overlap with one of our other selections. So NVII will get a REX shares weekly payer in there. It's been doing really, really well. I believe it is the best performing weekly payer by REX, and it's just doing great. Nothing much I can really say. The dividends are solid. It's gone up in price for total return. If we do ever want to check, we can turn off total return and just do price return. And we can see that it is on top for just price return as well, which is great. NVDW also climbed. If you don't know the different strategies between REX and NVDW, the Roundhill weekly pay ETFs, they're not, I should say they're similar. They're about 50-50. So the REX ETFs do half leverage, half options based. So you're getting some leverage growth and you're getting some options. When we look at NVDW, it's all leverage. So the returns you're getting or the dividends are actually just based off of the price going up. So it's a very interesting way of doing things, but NVII is our choice. It's our third ETF. Now it's time to take a look at number 4. This one was definitely not an easy choice. Let's look at our options. We have CHPY, GPTY, and ULTY. If you're not familiar, CHPY is the semiconductor and tech fund from YMAG. GPTY is the AI and tech fund, and ULTY is the basically momentum style play or high alpha, trying to get higher premiums and overall a little bit of growth tied in with that one as well. I talk about ULTY a lot on the channel because it's very cheap and people seem to love it, myself included, although it has been pulling back a little bit, which has some people scared, me included. Now, I did do a full interview with the YieldMax team just last week, and it was a really good interview, I would say. I should say it's a really good conversation. We had great talks. It was really cool looking under the hood for a lot of these funds, and I'll link that video at the end of this one if you want to know more about YieldMax, how their funds work, and the overall goal. And I talked specifically about ULTY and something big that happened, which was a strategy change that took place in April of 2025. Now, to really understand this, we can't just look at price. We have to look at total return. And in the last year, ULTY still didn't have the best total return because that strategy switch wasn't implemented. So if we go to the 6-month chart, we get a more accurate depiction of how these funds have been compared. We can see CHPY is the better performer of the three, and it is going to be my pick for this ETF account. And the reasoning behind that is I like semiconductors. I think long term they're going to be amazing. I think the growth is going to be insane as we look more into AI, as we look more into crypto, as we look more into tech. We're going to need more semiconductors. And even if it's not a high volatility asset, meaning we might not get the craziest premiums or dividends off of it, I do think it's very, very solid, and long term growth is just exponential. GPTY, I like the AI sector. I think it might be a little overinflated. It's pulling back a little bit. Nothing to complain about. The returns have been amazing. Just my personal opinion. And ULTY is very, very solid. I don't have anything really bad to say about it. I just think it's a little bit higher risk with the strategies and the underlyings, especially if we went into a really deep red market. So CHPY, all these ones have similar expense ratios except for ULTY. That's a bit higher. Another reason I'm not choosing it for this buy and hold portfolio, but it is the largest at $3.12 billion AUM. We have 50 million for GPTY and 37 million for CHPY. I don't only base things off of AUM or assets under management, but I do think it's an important factor to know what people are more interested in. So the winner is CHPY. I'm selecting it for this 5 ETF portfolio based off how it has been performing and my long-term views on the sector. Now that was our 4th pick, and our 5th one is very, very interesting. So I hope you guys are as excited as I am. If you made it this far, don't forget to like the video and to subscribe. It's very, very important. It helps me out, really. That's all there is to it, and I appreciate it. If not, no problem. Let's check out our 5th and final choice. Now this is a little bit of a cop-out. I'm going to be real. The last choice is WPAY. It's weekly pay universal ETF. It is not trading yet, but I'm watching and waiting for this because I think it's going to be absolutely huge. And the reasoning is what WPAY is, if you haven't watched my latest video on it, is a grouping of all the weekly pay ETFs. And that's why I chose NVII specifically over NVDW, because we would have some overlap with WPAY. So what it's going to do is it's going to hold NVDW, TSLW, AAPW, COIW, PLTW, and so on and so forth. And it will be a grouping of all 15 weekly pay ETFs. They may have more coming out soon as well, because they've had a lot of success with these and the performance has been really, really solid for some. Some haven't been as good, but if you want to hold the grouping and not have to specifically choose between Apple, Coinbase, Amazon, Robinhood, Meta, Microsoft, Netflix, that's the one to choose. You're going to get, of course, a little bit more risk with leverage at a 1.2x, but I'm okay with that. And I'm okay with having it with WPAY because, again, it's all these grouped together. So you have a little bit less risk than just buying one single ETF, single stock ETF, I should say, in comparison to some that hold a full grouping of all of them. Now, you could also take your favorite 10 or the 10 best performers and buy those, but you never really know. And this is an easier, more laid back way of investing, which is how I like to invest. So I hope you guys enjoyed this video. If you are interested in this stuff, don't forget to like and subscribe and check out these videos popping up on your screen right now, including 9 ETFs with 0 NAV erosion and that YieldMax interview that was an absolute blast. Again, a big thank you to those guys for jumping on the channel and explaining some really important metrics to me and to us as a whole. Thank you guys so much for watching. I hope to see you in the next video.